Hello world, my name is Ara. I am a new full-stack web developer and a very old investor. So my goal is to make everyone a millionaire. I don't think I'll succeed in my goal, but I hope I do make a few people a millionaire through watching my videos and taking some advice. So today I would like to talk about questions that new investors ask. As some of you know, I was a former professional poker player, and usually within the first 60 seconds, if someone was very, very new to poker, they would do something that would kind of let me know that they were a very new player, or this was their first time playing or something. They would just do something that was a little unorthodox, or someone that was slightly experienced would not do. So in the investing world, this would be something along the lines of, how much can I invest? When someone has never invested before, or they're very, very inexperienced, they'll usually ask that question, how much can I invest? Which is a very weird question. I don't want to say it's the wrong question, because when you're new to something, you don't know the right questions to ask. When I was a very, very new web developer, I would go onto this site, Stack Overflow, and I would always get yelled at because I'm asking the questions the wrong way. And when you're new, you don't know the right way to ask questions. So it's understandable that new investors ask, how much can I invest? But to give you a little analogy, that's kind of like asking me, how many bites of ice cream can you have tomorrow? And the answer is however many you want. It's not really up to me, it's up to you. The same goes with which stocks should I buy. It's really up to the individual investor. So I think when people ask, how much can I invest? What they're really asking is, what is the minimum I can invest? What's the minimum I can get started with? I just want to dip my toes in the water. And I think that's a very fair question. And to go to the extreme, sometimes I see advertisements about Stash when I make these videos, or when I go watch other people's videos on YouTube. And Stash always advertises that you can get started for $5 a month. So I hope someone can look into that and get back to me, because that seems very interesting. I'm not interested in that, because I like to invest much, much more than $5 a month. But I would love it if someone can let me know about that, or maybe I'll just try it out just for fun and see how it goes, just so I can maybe recommend it to other people. But typically, the way to go about it is to open up a brokerage fund, and then if you're uncomfortable investing a lot of money, take $100, let's say, and find a stock or a couple of stocks that are relatively low priced, or maybe something you could buy 2 shares of for $100 or something like that, and just buy something. Just buy anything to go through the process. It almost doesn't even matter if you buy a good stock or a bad stock, because if it goes up or down from your initial investment, is relatively insignificant compared to when you have many, many more thousands of dollars invested. So I would say just buy anything. And so I think one thing to keep in mind, though, is fees. So companies charge fees when you buy shares of a stock, and they charge small fees when you invest in mutual funds and index funds and things like that. So the way to keep fees in mind is, typical companies might charge $5 when you buy a certain stock, and then hopefully years and years later, when you sell that stock, they'll charge you another $5. So I would keep that in mind. So I wouldn't buy $20 of a certain stock. If a stock was $5, I wouldn't buy 4 shares of a $20 stock and then pay a $5 fee, because that would be 20% of the value you're giving to the company. So even when you buy $100 of something and you pay a $5 fee, that's a $5 percentage of the amount you invested that you're giving to the brokerage company. So if you were to invest $1,000 in a stock and you pay a $5 one-time commission fee, that's not a big deal, paying $5. It's nothing. That stock will probably go up so many more times in the coming years that you'll just forget about that $5. It'll just evaporate into nothingness. And so I mean, $5 isn't a lot to spend, but I wouldn't spend $5 if you're making super small trades. So if you want to invest $100 one time, or I guess $95 and save $5 for the commission, I think that's okay for your first trade. And that'll allow you to get your feet wet, give you the feeling of owning something for the first time. And you'll get the feeling of what it feels like when a stock goes up or when a stock goes down. When you're new and you see one of your stocks go down, then it really just sucks. It just sucks. It's a bad feeling. You feel like you made a mistake. And what you have to learn is that you didn't necessarily make a mistake. First of all, you don't lose money until you sell the stock. If you buy a stock for $100 and it goes down to $70, then you didn't lose money. When it's trading for $70 and you're seeing that it's trading for $70, that's the price that other people have bought and sold their shares for. You don't necessarily have to sell your stock for $70. There's lots of times when I have been way down on a stock, but I just didn't care and I just held on to it longer and longer, and eventually it went back up again. Also, on the other side of the coin, there's also been times where I've been way up on a stock and I didn't sell it and I didn't care what other people were trading it for, and then it went back down and I ended up losing money when I eventually sold it. But in general, if you hold stocks long term, 10 years, 15 years, 20 years, you will make money on most of the stocks that you buy, in general, from my experience. And another point that I'd like to bring up is that I am not a great investor. I've made a lot of money in the stock market by investing in stocks and options, but not because I'm a great investor. It's because, in general, most people make money in the stock market. So when you buy shares of big companies like McDonald's, like Home Depot, like Apple, most people that have invested in those companies have made money just because Apple has done well, McDonald's has done well, Home Depot has done well. And you don't have to be a great investor to just pick a variety of companies or a diversified group of companies. Pick 10 or 20 different companies that you want to invest in over the next couple of years, and you'll probably do well. I would guess, and this is just a complete guess, but just based on my experience, if you were to invest over the next few years, if you were to invest $1,000 in 20 different companies, then I would guess 16 or 17 of them will be up, meaning you are profiting from the point when you started to invest in them. And I would say 3 or 4, if I had to guess, would be losing money. And on those 3 or 4, you might be down 30% or 40%. But on the 16 that you're up, you might be up significantly more. Maybe a couple of those 16, you're up 100% or 200% or 300%. And that doesn't even include all the dividends that you've made from those companies. So don't be afraid to pick your own stocks. You can listen to people like me to try to get ideas of what companies to invest in, but you shouldn't base your investing decision on whatever I say, or whatever the people on CNBC say, or The Motley Fool, or Seeking Alpha, or any one of those investing websites. The investing decision should be entirely up to you. I would suggest that you take some things into consideration. You want companies that are growing revenues, that are selling more and more stuff, so that way they're bigger companies years from now. You want them to be growing earnings. And also, I would also suggest that you want it to be a company that you're very, very familiar with. The reason that I say you should use the products of the company that you invest in, if it's in a gas company, then maybe it should be a gas company that you actually directly buy gas from, like National Grid, or a company that sells gas to you, like Exxon Mobil, if you typically go to Exxon to buy gas. Or if you do a lot of home improvements, maybe you want to buy shares in Home Depot, because there's a lot of customers in the store and you use their products. And the reason why that is so important is because there's going to be a lot of times throughout your investing career or life, not career because you're not doing this for a living, but there's going to be a lot of times throughout your life where the stocks that you invest in are down, and they might be down significantly. But if you buy shares of Home Depot and that's a strong company, and that there's no chance of them going out of business because more and more people are always going to have to fix up their houses, then it lets you sleep well at night. You don't have to worry about Home Depot going out of business. You don't have to worry about the stock of Home Depot being down because you know they'll survive. You know they'll be okay. So I would definitely suggest using those metrics when you make your decision. You want a growing company that's going to be around 10 years from now. You want to be sure that it's going to be around 10 years from now. And you want it to typically be a company that you're very familiar with. Either you use the products, or you work for the company, or you know people that work for the company. You kind of have an idea of what's going on. You're familiar with what's going on. So that being said, I just wanted to let you guys know that I'm not a genius investor. I'm just someone that uses a lot of common sense. I enjoy looking at math. I enjoy looking at balance sheets and income statements and figuring things out for myself. But you don't have to. You can just use common sense and pick your own companies and feel comfortable that if you pick 20 different companies to invest in over the next few years, you're probably going to be right on most of them. Just use some common sense when you're picking those companies. Invest in nice big companies that are paying dividends, that are growing revenues, that are going to be around. McDonald's is going to sell hamburgers tomorrow, and Home Depot is going to sell hammers tomorrow, and Apple is going to sell iPhones tomorrow. So just use some common sense. Google might be a great choice. They're going to advertise. They're going to make money on advertising tomorrow. So just use these common sense metrics when you make your choice. And I'm flattered if you listen to me on my choices when I make some videos about what stocks you might want to consider buying. But ultimately, you should be the one making the choice of what stocks to buy. And you should be the one deciding exactly how much it is that you want to invest in the stock market. So this video went a little over 10 minutes, but I thank you so much for listening. To my new subscribers, I thank you for subscribing. And I will be coming out with a video either later today or tomorrow talking about 4 companies that I believe are undervalued. If you want to get a head start on studying them, I'm probably going to be talking about Ross Stores because I saw that it dropped down to about $55 today. I will be talking about Foot Locker, which Foot Locker dropped below $50 the other day, and now it dropped again. It's last I looked, it was at around $48. I also saw GE on the news. GE was around $26, and its high point was over $31 within the last year. So those are 3 of the companies I'll be talking about. If you want to look into them ahead of my video, you're more than welcome to. And again, thank you for listening, thank you for subscribing, and I will see you later.